Okay, lot. So I'll be recording videos a lot in the next few weeks, and just sending you little snippets so you can sort of eat adding stuff, and try to keep it as on the simple side as much as possible, so you understand just the principles that are at play. Forget about context and all that stuff. It's just about just the principles right now. During the call, I went over one of the principles, which is I always want to know where volume is trapped, right? But there's even deeper into that. There's a couple of principles that are far more simple and fundamental than that particular principle. It kind of ties into it, but it's a little bit different. And it's easy to understand, easier to understand when instead of looking at things on a chart, we are looking at the tape or the ladder, or what do you want to call it? Basically, I divide it in two things. It's the ladder, it's this column here, and the tape is the actual time and sales. So these are the actual prints as they come in, and the ladder is the order book, right? So you have they call it DOM because DOM stands for depth of market. So you have the best offer is this one, and the best bid is this one, but then you have all the offers that are, one tick below the best offer, and and as they go down or up, whatever. And you have the bids, same thing. You have this is the best bid, and then this is the next best bid, and the next best bid, and the next best bid, and you see the number of orders there. That's your order book, basically. It's just a book, super manipulated. Half of these orders are not even real, they're spoofing, they just, but whatever. It's it's a game in its own. And NQ is not the best instrument to study and get acquainted with the ladder and basically the game, the order book game in itself, because it's so thin and so fast that it's not. It's better done on ES. I'll record videos on both of those in the future. But so this is the order book, which is the ladder, but this is the tape, and the tape is the real. This is There's no fake stuff here. This is the real thing. When something prints here, it's because it happened. Period. There's no doubt. There's no spoofing. There's no. That's what it is. So the tape gives you sort of like the truth of what happened, and then you're seeing it print in real time. And then when you see the chart, it's just a representation of what happened on the tape, what printed. So again, this is a very short time frame. This is a 5-second chart, and this is one of those trades that we were talking about. And I'm just going to use this as a good example because it's easy. We were just looking at it, and um, when you get this, well, this is not the trade that I'm going to show you, so I'm not going to go into that. But for example, this one. So, this is a setup that we're going to play on the tape right now, and this is just basically a trade. Quick, again, context, narrative, how we got there and how we got it to the point where it was a trade worth taking, is that this thing had this move up here, and it sort of exhausted here in the 900s, somewhere between 900 and 920s. We can see these wicks here. That means that it popped into that area and got rejected really fast, and that's why they're wicks, not the body of the candle. And you can see you are always paying attention to volume is telling us part of the story. So this wick, for example, you see that this was a little pop here into the 920s that got rejected immediately, and look at that volume candle here. So that tells you that that was a lot of volume, that this push up into this area was met with a lot of volume, a lot of selling, and that's what that volume candle shows there. And then that volume candle is basically, if you're going to see that on the tape, that candle is going to show up on the tape as a flurry of prints, like a burst of speed in this in the tape, because all the prints are coming in really fast, and that's what you're gonna see that on the tape, and you're gonna see it here on the chart. So a chart is basically a representation of what happened here on the tape, and we're going to see how that happens in real time. So going back to how this trade sets up, we're getting sort of rejection here at the highs. Every time you see it didn't happen just once, this was the most critical one, but it also happened here. Look at the size of this candle when it tried to pop into the 920s, again, wick down. And basically, and this is one of those truisms that's sort of true all the time. Every time you see top wicks, tops, so candles that are not complete, and you see a lot of wicky action, and there's all these wicks are into a specific area, just means, just shows you that there's a lot of selling in that area that's rejecting really quickly. On either side. In this case, it happened on the downside, right? But and those wicks in combination with big volume candles indicate that that's, quick rejection. So in anyways, when this thing extends up into this area, it's trying to like break through, and it can't. And there are stupid people that are thinking that this could be along here, including us sometimes. And those people are basically either building up positions, either big positions, or just positioning themselves wrongly, and they will be trapped. And when this thing and this volume profile level here, this point of control, tells us that most of the volume has traded at around 24,906, between that and 24,908. So that's like the point of control of this consolidation here. And what happens is that, it flushes here well below that, well below that into 878. We see that this volume gets saved. It looks like it trapped. It looks like that type of setup that we're looking for, and then we would probably be longing here because we think it trapped, but then we get trapped here, and then we become part of the victims here that need to capitulate and then fuel this sell off to the downside. A lot of trappy, sketchy, trappy action throughout this whole thing, right? And in the end, it kind of feels like the the sellers, whatever, the bears, what are you going to, that side, they won, and this thing is now selling off. But it doesn't take out this key area here around in the 850s, and you can see that value area here with that point of control at around 856, and it then retraces, it comes back, and again we have that point of control from that value area up here at around 24,907. We said 24,906, 24,908, something like that. So it gets back up there, and then it it well, first it attempts, it tests, fails, comes back up, tests again, takes it out a little bit, but then fails. So it's attempting to reclaim that area. And there's something, and then we're going to see this on the tape. There's a moment here where you kind of really, it's kind of like um, noticeable that all of a sudden you know that there is volume trapped here. You understand that there's a ton of volume that was trapped here because people were thinking that this would be continuation to the downside, and they shorted at different stages of this move. So in aggregate, there's a price line where they all would capitulate, but each one individually will have different pain points. So different points on the way up where they're underwater, but they haven't covered yet, and there's going to see if this kind of like rejects off of this level and it comes back down. Many of them will be underwater, many of them not yet, but this will be this 24,908 will sort of be the line in the sand for them because they know that if that level is reclaimed, it's not coming back down, and that's when they all capitulate, and that's what forces this move up here to this. So we have already read through that basic principle of of volume being trapped, and that's what fuels a move. Um, but I'm kind of going through the motions so we understand how we got here, and then what are we seeing on the chart where we're seeing, for example, that this approaches that 25,908 level here, and we see that the volume candles are pretty much, on the lower side, which means that we have a tape that's not very fast and it's probably stalling. The tape is stalling a little bit. And then when we get the pop of momentum and the move up and people are capitulating, then we see this huge spike in volume. And we will see that on the tape. We will see that as a burst of speed on the tape, a flurry of prints coming in, an um, increased velocity in that move. Um, it may sound complicated, but I want you to stay with me here because, um, again, it's important that we associate those when we have things setting up in this way and we know that there's volume trapped, that these increases in volume are always going to mean that there's an increase in velocity and prints in the tape. Um, so that's kind of key because in getting a rhythm, getting into a rhythm of how the order flows, of what we call order flow, and how to trade it on the tape, it's important that we understand that concept of volume, and that volume in those situations equals bursts of speed on the tape. So the tape is going to be always accelerating and decelerating and going faster and then stalling. And why is that important? Because when it goes faster and there's a burst of speed, it means that there's an increase in volume. That is liquidity, right? Those prints, it's printing there because there are people stepping in, buyers, sellers, whatever, and they're transacting at that level. And we always, not always, there are situations in which we don't, but we'll get into that some other time. But um, as a rule of thumb, as a core principle of trading on the ladder and using the tape to trade, is that you want to be putting orders against liquidity, or you want to be putting orders when there's liquidity and there's being a lot of prints. That kind of makes sense when the tape is like stalled and there's very little few orders being printed, transactions happening. It means that, if you want to put on, um, I don't know, 20 contract trade, and it's only trading 2 or 3 contracts per every 5-second bar, well, it's gonna be an issue. There's no liquidity for you to put on that trade. You're gonna move the market if you do put it on all at once. So most of the time doesn't matter with the tiny size that we trade right now, but it will matter when we trade more size, and it just matters. Just matters, because the market moves, pivots, and finds its points where it pivots and turns and whatever on those, and typically in areas where there's like a higher prints. So, because right now this all leads to one thing, and this is where I'm going to go to that core principle on how order flows. And I wish I could have found a cleaner, more simple example, but this is just something that we were talking about today, so I'm going to try to use this. Um, let's imagine let's draw a rectangle here. That this is the range, which let's imagine, no, this was sort of like the range there, right? It's like let's imagine that those are the you know the limits of this consolidation here, which is not, it's kind of like an expanded consolidation. We had a tighter consolidation up here, then it moved down here, and then it trended back up. But let's imagine that this whole thing is a range, right? Or consolidation. And if we go to a higher time frame, it'll kind of look like that. Sorry that I keep moving things around, but that's here. Wow, well, this is too much. This is a 5 minute. Already feels like it's too high. Let's go to the 1 minute. We even on the same day here. So it's this bit of consolidation here, this range. That's where we are. This range here. That. This is the top of the range. This is the bottom of the range. I'm going to change the color of the rectangle so it's easier to see. This one. So let's go back to the 5 seconds. Really quick. I'm sorry. So on the 5 second, what we see is come on. We see this range here, and we see that for example, this move exhausted here into the top of the range. And then what do we see here on the volume? We see an increase in volume when it gets there into the top of the range. And basically what it did is it exhausted that little bit of momentum there, tops out there and exhausts. It means that it is met with a ton of volume, ton of transactions happen there, and they sell into it, and you can see that on the volume candle, and you would see that on the tape as well as a flurry of prints and an acceleration of prints. This is probably not the best because this was not an organic action day. So this was not organic. This was very manipulated and very trappy. But in a normal range, actually, let's focus here on this tighter range, on this very tight range. In a range, that's probably easier to visualize. So in a range, every time it reaches the top of the range, it'll print, look at the volume candle, bam, and then it rejects, and then so we get into the middle of the candle, and then there's like lower volume, and then it gets to the bottom of the range, and it exhausts, and then we get another larger candle, and then it kind of backs, trades away from the bottom of the range, and you see how the volume decreases, the volume candles decrease in size until it tests the top of the range. This is not quite the top, but it's almost there. So it wicks into the sort of trying the top, and then bam, huge volume candle. So that marks the top. It exhausts, and then it moves away from the top of the range. And what do we get? We get again another, the volume candles start decreasing. Here it tests the top of the range. We get again that outsized volume candle. And then when we move away from the top of the range, the volume candles become smaller. So that's like the pattern. That's a rhythm. It's a flow back and forth between the top and the bottom of the range. In this case, clearly the selling was more at the top of the range, not so much at the bottom. That's what it indicates here, what the volume candles indicate. So again, how do these big volume candles, how do they look on the tape? It looks basically, the tape is stalled, and then when we're hitting the top of the range, flurry of prints, and then it moves away, and then the tape stalls a little bit, and then when we meet liquidity at the bottom of the range, buyers step in, another burst of speed on the tape, and that's sort of how the tape flows. So by default, this is where I'm getting at with this is that we are always trading. Uh, we're always trading. If we are scalping off of the top or the bottom of this range, our orders we're always going to be getting in when we get that burst of speed in the tape because that's showing us, that's giving us some safety. It's like, oh, here's where the turn is going to happen. I'm going to get in right here against this burst of speed. And if we ever get past the point where we're getting this burst of speed, then I'm out. That burst of speed is what it's kind of like a wall of transactions that protects you because they tell you that this is the top and you always trade against it. So this thing is moving up, burst of speed, like for example here. So it's, you know, drifting up and then accelerates into that area, burst of speed on the tape, tons of prints, volume candle that um, creates itself rapidly, and you know that you are fading that. So you are getting in against that and then shorting. And when that happens on the shorts on the bottom, then you get long and so forth. And that's sort of like the rhythm of things. So these are mini exhaustions. This is what we call exhaustions. This would be a mini trend. It's not a trend because it's a very tight consolidation, but we can call it that. And this would be the exhaustion of that mini trend. It exhausts and then you fade it. That's the basic principle of how things move in a range and how that the rhythm of things and how the order flow works. And this is basically that technique that we use. We're fading those volume things. Now, what happens when we um, let's say that the key level here, like we said, it was 24,908, because we modified the range. The real range here, we were saying that was something more like this, right? So what happens um, when we come back and we test this range, and when we're coming back into a range that we've traded away from, it's not the top of the range or the bottom of the range that matters. It's that point of control of the range. That's the level now that matters. And what happens when we approach that level? And we are supposed to get, just like it happens every time we get here on the top of the range. So when we approach a key level where it's supposed to be a level of, it's supposed to be resistance, basically a support or resistance. We're approaching that key level of resistance. What happens if when we don't get a a large volume candle, or when we don't get that burst of speed that we're expecting? What happens when we start approach that level and we're approaching that level with a stalled tape and it kind of like keeps drifting upwards? That means that it's not rejecting. So in this case, it's sort of like a mixed thing. In this case, it approached here and it did get rejected, and we see this candle. But what happens is that instead of dying out, it kind of gets trapped here midway and then tries again and takes out that high. So this is already telling you that it's kind of trapping, even though it tried to reject once, twice, whatever. But at this point, even if that had not happened, what's happening here is that it's drifting up into that 908, 909 level, 910 level, and look at the volume. Nothing. Low volume, which means, we're going to see that on the tape in a minute, it means that the tape is stalled, slow. And then there's a point here where you're like, okay, the level is 908, and we're already in the 914, 915 area. We literally took out that level, and there have been no prints, no volume candle, no acceleration of the tape. Whoever is shorting that level because they think that it should reject because it's a resistance level, because it's the top of the range, or in this case, the VPOC that's going to be reclaimed, all that stuff. and we didn't get prints into the level. In this case, we did get them here. So let's imagine that this didn't happen. Let's imagine that this just comes up and there's no prints. Um, then um, there's a moment here where everybody realizes we are trapped. This thing is not rejecting. We didn't get any prints. And now these people are going to capitulate. And when they do, that's when the prints come in. But in this case, you're not trading against the prints, you are trading with the prints. And that's, I hope this is not so it's complicated, but that goes back then to that core principle that I just sent a copy of a post that I found where they talk about there are two market regimes. What was the words that they said? You are either trading momentum or you are trading mean reversion. So this is where you switch. I am trading mean reversion, and that has to be the default. You always trade mean reversion. You always fade. You're always supposed to fade those bursts of speed on the tape, fade those volume things that candles that you see on the chart until this happens. And when this happens in a fraction of a second or in a second, that's where you need to switch. Okay, I am switching from mean reversion to momentum, and now I am joining trend and getting out when it exhausts, which happens here. That's the key moment where you switch from one thing to the other. And that basic setup that we were talking about, which is that when people are trapped and then we get that pop, that is just basically an iteration of this, of recognizing that we are switching from default fade volume, fade volume back into the mean. That's our default. But when we know that there's volume trapped and we see that the volume, in this case, there is no volume to fade, that's where we switch back. Okay, switch from mean reversion to momentum because now we're capturing this momentum move and we're getting out on volume. Instead of fading volume, we're actually getting out on volume. And the the that's like a very, and I can every single trade, no matter what the trade is, and I'm gonna actually do this day in and day out. Every time I'm reviewing my trades, I always record the tape, and I'm always going to reference to this basic principle so you see it in action. In every single trade, you're going to see some iteration of this principle playing out. It's always going to be a matter, it's not just a matter of, yes, it is a matter of finding out where people are trapped, but even more basic than that, it's that basic principle that I just sent on that tweet that I found. Um, you're basically, there's two market regimes. There's mean reversion and there's momentum, and that's it. And it's about switching from mean reversion to momentum trading in a second when necessary on a very low time frame or in a higher time frame. Same thing. It's about recognizing when we are trading in a trend and when that trend is basically breaks, and then there's the beginning of a trend. When that range, that's why it's called breakouts, right? It breaks out of that range and then we get a trend until that trend exhausts. So that's it. That's the only two regimes that we have in the market. We have mean reversion in terms of executing. We execute mean reversion or we execute for momentum. And then momentum has its own, obviously, his own stages. We have the beginning of momentum, which is the breakout, and then we have the end of the momentum, which is the exhaustion of that momentum, and then we have obviously the trend into that exhaustion, and then counter trend. But even within the range, those are mini trends and counter trends that are going back and forth because it's all fractal. It's all, again, we think in time frames. So whatever is true in one time frame is true on all time frames, and the this little range here is just a sum of an adding up of tons of little trends and counter trends on the lower time frame. So but that's like a key principle that's always at play. And why am I going through all this? Because this stuff kind of sounds like very too drilled in and too granular for chart reading and stuff. But when you are reading the tape, it is everything. Especially if you're trading something like NQ, if you're trading something like ES or something that's a lot more liquid, then um, actually reading the ladder, the order book, becomes a little bit more important, and it's not so much about speed. It is also, but it's less so. But trading NQ, it's all about speed, acceleration, and deceleration dynamics, and it's all about trading against those speed accelerations and decelerations. So let's just go over this. This clip is only like 3 minutes, something like that. But let's let's uh let's just see how it looked. So I'm hoping it's good enough to exemplify this stuff. So where are we? Oh, at the beginning. Okay. So that was this trade. You probably can't see it, but because I haven't drawn that trend line, but you can see here how here it's making that lower high, and I'm adjusting the chart. This here is that point of control that we talked about, which is the 24,908 area or something like that. And this was like creeping up into that 24,908 level that has to be reclaimed. In this case, we did get a little bit of a burst of speed here, and we see that volume candle here when it tested it first and it rejected, but it wasn't, you know, um, definitive. Um, So this is just so you can recognize here the setup here on the chart. But now I'm going to rewind to the beginning because now I just want us to focus on the tape. So we've bounced here again. We've bounced here from that 24,850s area. This is where we are here. I don't know if you can see it. And now we're making our way back up. And this is, look at the speed of the tape. We're still below 900. Now we're going up into the area is 907, 908. And look at this tape, look at the rhythm of the tape, and look how we get a little bit of a burst of speed when we test it up there, but it's not dramatic. Okay, but we get rejected, but then we're back again. We're going back against that level again. Look, now we're testing 909, 907, 908, 909. We're already up there. We haven't had a dramatic burst of speed and a ton of prints that are rejecting in that area. So when we were trading that, if we had been trading that earlier up here, we would be fading those pops. And look at the volumes, right? But here we can't be fading anything. We haven't had a burst of speed to fade. And all of a sudden now look how this is creeping up. The ladder is just like going up above that 907, 908 area, and we still haven't had that exhaustion. We pull back a little bit. Now it's clear that even if we're pulling back down below that 907, 908, it's kind of clear that we're not even getting those bursts of speed in this area, and that it looks like it's just going to take that area out. And at this point, we already remember we think that there's a bunch of people here that the minute they see this drifting above the 908 area and there's still no rejection, that they're already ready to capitulate. So this thing is already, and you see now, well, you have to train your eyes to see this, right? But I don't know if you saw that there, but after we got that little drift above 910s and now we came back down, now all of a sudden we see some interesting things on the order book. And if we just go back a few seconds, look at this order here, 105 contracts offered at 24,910, which is, triple digit. So the normal offer is typically, 5, 3, 8, and this is, 10 to 20 times the normal size of an offer. That's huge size. It was flashed for just a fraction of a second, but if I don't know if you saw it there again. Like you'll see it. Like once you're trained, you're like get used to reading the tape. Um, and whatever that has that has many explanations. That can be spoofing. That somebody that's flashing their huge size because they don't want it to go up, maybe because they want to cover before it goes. So they want to or it's real size. And if it is real size, because there are people shorting here thinking that this is going to be the top, and this size gets filled, they're screwed because the minute it does and it goes past it, then they have to capitulate. So this adds to the fuel. So you see how, look at the tape, how it stalls. It's stalled. And now that we're, drifting up into this area, then all of a sudden, this is where, bam, we get that acceleration. But we get look, you see how the tape accelerates, but it accelerates because those people are capitulating. So this is an example of how we're getting that people capitulate, and then we get the exhaustion up here. If that burst of speed and that printing had happened at the level that we're supposed to reclaim, then this is not momentum. This is mean reversion. So that burst of I don't I think I kind of picked this because it is noticeable here. It's not, even if you're not trained, it is noticeable, the difference in speed. You're seeing that burst of speed here. So the difference is, if we see that burst of speed when we're approaching the level that needs to, the resistance level, um, that means that we're fading. That means that it's topping out. That means that it's a mean reversion trade, and we trade against it because it's going to go down the same way it was going down at the top of the range here. Every time we saw a volume candle like this one, you fade it. You fade it, right? So in this case, it did not. We did not get that. And that's why we switch from mean reversion, which is our default, to momentum. And we end up getting that burst of speed and outsized printing way up when it exhausts way above the 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 range. And I don't know if this is like easy to see for you, but it's easy to see for me. Um, but I think it's it's clean enough that for an untrained eye, you can still see that difference in speed in the tape. And I don't this may sound confusing right now, but I'm gonna just repeat myself every time I review a trade. I will reference this very specific um, um, principle, so you understand it and you get the idea, because it's a core principle about that we need to understand when trading off of the ladder, understanding that rhythm and that flow, um, 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 and you can see it, and how these and why how we build these setups based on those principles. Oh man, I know I hope I made some sense there. It'll become clear later.